each client is different, each project is different. With the same client, if you brought me 3 deals in a year, each of your deals are going to be different, and actually what type of funding structure you might need will be different, and spending the time understanding that is key. I think both the background in strategy and finance and also the background as a developer is unique. I don't know of many other brokers or owners of brokerages out there who have built their own new build houses, who have done an office to resi. We completed about 20 projects, the largest being 2 penthouses in Battersea that each sold for 3.5 million.
Wow. Hello, my name is Ben Wilson, the host of the Developers Club podcast. Today I'm joined by Stefan Canavan, the founder of Willow Isle Capital, a financial advisor and also a founding member of TDC, the Developers Club.
Yes, thank you.
Welcome, Stefan. So first things first, I hear you up for a few awards at the Bridging and Commercial Awards. Why don't you tell us a little bit about those?
Yeah, I mean, it's a fantastic achievement for both myself and the team. The Bridging and Commercial Awards are arguably one of, if not the biggest awards in our space. So we were hoping for one nomination or one shortlisting, and we've been shortlisted for what I think the 3 biggest categories. So Best Bridging Broker, Best Development Broker, and the Service Excellence Award. And I think I'm right in saying that we're the only brokerage to be shortlisted in all 3 categories.
Wow.
So haven't won anything yet.
Hopefully. So you've got a good shot though.
We've got a good shot. So yeah, no, just a great achievement for the team, for myself. Thank everyone who's been involved in the journey, the Developers Club, the members. But yeah, now we've got to go and win it.
Well, good luck. I wish
Thank you.
Hope you win all 3.
Yeah.
So you, Stefan, you've had quite an interesting journey into becoming a financial advisor and getting into the bridging side of things in particular, and mortgage lending, or mortgage brokering, I should say. Tell us a little bit about your journey there.
Yes, it has been somewhat of a journey. So I graduated from the University of Manchester and then went to work in the city for Ernst & Young. I was there in total for about 6 to 7 years, and I specialised in management consultancy, strategy, problem solving, org design. But I was a homes under the hammer kid. So I always loved and wanted to do property. So as soon as I started working at Ernst & Young, I partnered with a friend of mine I met there, and we bought our first flat. We had no clue what we were doing, but we did as much of the work as possible. You know, we used to shower in the gym, run to the pub if we needed to go to the toilet. And, you know, slowly we worked our way up through that and really enjoyed the process. But whilst also working full time in the city and traveling around Europe for work, it was just a lot. So I took the decision then to take a sabbatical. Wanted to grow the development side of the business, but the project we had then went into probate, nothing happened, so I was left with no job and no project. And then decided just to take my build team and go out and sell project management and building services. And we did that for 2 years. We completed about 20 projects, the largest being 2 penthouses in Battersea that each sold for 3.5 million.
Wow.
But I quite quickly realised I wasn't the right person to run a building company. So from that, a lot of the people we'd worked with in the kind of project management and building space actually became the seed investors for what then became our development company. And that's through that I met Shiro. That development company ran for about 5 or 6 years. We worked on projects in London, Stoke and Manchester. We did a 22-unit office to resi, new build houses, barn conversions, title splits, office to resi in London, 1 to 2 bed flats. We were kind of deal-led rather than strategy-led. That business came to a kind of natural conclusion. I didn't want to continue being the sole developer, and also we were spread so far between London and Manchester. I was then kind of looking at where do I go, and had a lot of options, but with a background in consulting and finance, and having also developed and borrowed a lot of money and, being honest, made a lot of mistakes. I felt I had a lot to offer going into the brokering space, and fundamentally that's what Willow Isle was born out of.
Well, I was going to ask you what makes your company unique in terms of as a boutique property finance brokerage, but I think probably a lot of it is the fact that you have this amazing experience, which almost none of your competitors are going to have, which is fantastic.
I think both the background in strategy and finance and also the background as a developer is unique. I don't know of many other brokers or owners of brokerages out there who have built their own new build houses, who have done an office-to-resi. So, when someone sends me an appraisal or we're working through detailed construction legals, I know what a collateral warranty is, I know what PI insurances are, I know how you need to do your car policy, I know how much your warranty should cost, we can sense check your models. But we've now taken this a step further, because it's all well and good me having the background, I now have a team. So we've now started our own project partnering with someone where the team are now doing and involved in their own projects. So not only will I have the experience, they will also have the experience. And I think that's core to our values.
So your team are actually involved in a development deal?
Yeah, exactly.
And who have you partnered that with?
I can't say on.
But a client of yours.
A client, yeah.
Not a specific name.
Yeah, so we've partnered with a client. They brought a deal. They needed some investment. We've provided that investment. So it's a good way for us to, expand our business, but also give the team first-hand insight into what funding and running and then exiting a project feels and looks like, in on the ground.
It's the best way to learn, isn't it? By actually getting involved with it and doing it. So interesting. That seems quite unique.
Yeah.
I know from knowing you as a friend and also from the Developers Club, you really pride yourself on transparency, trust, and collaboration in the business that you have. And how does that benefit your clients, do you think?
I mean, you have to appreciate that, we're dealing with hundreds of thousands, if not millions of pounds on each transaction. So trust is huge. We have some cases that need to complete in 2 or 3 weeks. We have some cases that have big problems that need to get resolved. What clients want is just communication. They want someone who they can pick the phone up to, they know are going to answer, and that's how you resolve things. You can't go in our business a week without answering a phone call or an email. So our internal SLA across the whole team is every email is answered on the same day, or maximum within 24 hours. So if you email us at like 6 p.m, it's hard for us to provide a full response, by 11 p.m, because people have got homes and families. But it should always be responded to either same day or within 24 hours, and that communication is key.
So you're always available within reason.
Within reason, yeah.
But it's something I've learned from dealing with brokers and lenders, is that if you actually keep people informed of what you're doing, what your plans are, and more importantly, what your issues are, it's amazing how much you can get resolved. Often things you think that a lender won't be happy with, if you keep them informed, they'll go, well, actually, we'll work with you. And it works both ways, with clients and with the lenders themselves, I think.
Yeah, and this is property, right? Nothing goes to plan.
Nothing. I can testify to that.
Nothing goes to plan. And as long as you appreciate that, then it's the communication that resolves the issues. And that's why the communication is so key.
Yeah. Absolutely. And with your background in development and capital raising, and obviously in the corporate world as well, how does that influence the way you work with developers and investors?
I think the biggest advantage it gives us is that we understand each person's position. I'm a big fan of putting yourself in the other person's shoes.
Yeah.
And actually, then you can relate to what they want, because what a client wants from a lender and what the lender wants from the client, and then what the equity investor wants from each people are different. And you do have to understand it from their perspective. I think having sat in part in each of those shoes, you can relate to them. And then again, it's that relation, that communication, then you can start to help bring people on board. And I think, again, like that USP of having kind of sat in each of those camps does make us a little bit different.
Absolutely. You've certainly worn a lot of hats.
Yeah.
And I guess every developer and entrepreneur faces significant challenges along the way. And what are some of the biggest ones you've overcome, in property finance and development? I
think with any business, it's just getting it off the ground. It feels like you're literally pushing rocks up mountains. When I started for the development side, we were finding good sites, but we didn't have, a great asset base to PG. We didn't have a load of cash to put into it, so we didn't have a lot of equity. So that was all about trying to go out and find the right partners to help us overcome those hurdles. And it just took time and tenacity. When I look at when I started up Willow, we had to find the clients, then we had to get them to trust us. I remember at times starting Willow being at 5 networking events every week, just out there trying to meet as many people as possible. And it's just trying to get it moving is, I found, the hardest bit. But once you do start to get momentum, you can build on it and grow from there. But it's just that initial push.
It's a snowball effect, isn't it?
Yeah.
It gets bigger and bigger, and then you get a critical mass, and it starts to move for you. Which, absolutely, I think we've all experienced that.
Yeah.
And is there a particular development project that you've helped finance that in particular you'd like to talk about that was challenging and you did some creative finance on?
I got this question and I thought they're all bloody challenging, right? I think if you look at it, clients come to us with, different situations. Some have limited cash and need to stretch the gearings, and then you're into, stretch facilities, mezz facilities, equity facilities. You have some clients who have complicated schemes, so they're doing phased planning. You have some clients who have really complicated structures or funding structures. So very rarely do we have a deal that lands on our desk that we go, oh, this is vanilla. So I think what we try and do is spend the time to understand each client, what each client's project is, and then what that client and project requires, because each client is different, each project is different. But then I would almost argue with the same client, if you brought me 3 deals in a year, each of your deals are going to be different, and actually what type of funding structure you might need will be different, and spending the time understanding that is key.
Well, I know you go the extra mile for your clients, and I know we can't obviously mention specific names, obviously for GDPR reasons, but I know you even, when you had an issue, one particular client, you actually went to the CEO of the lender and met them in person and managed to get something resolved, which I thought was quite amazing.
At MIPIM, I did that on 2 cases.
Yeah.
So at MIPIM we had one case where it was rejected and we weren't having it communicated to us as to why it was rejected sufficiently enough. So yes, I tracked down the head of one of their divisions there. And then on another one, I thought a lender would be really suitable for a deal. They sent the terms, or they responded to one of the teams saying, oh, we can't do this. And I was like, well, you can. So I tracked them down at a lunch and I was like, look, why have you declined this deal to the owner of the lender? And I was like, well, we shouldn't have. Maybe they've missed something. So over a glass of rosé, we hashed out the deal, got bespoke terms that were better than anyone could have got going direct, and then that's now in application. So yeah, we are known for going a bit above and beyond. So basically
what you're saying is, if you're ever struggling, go to MIPIM, find the CEO of the company, corner them, buy them some alcohol, and then you'll sort it out. Yeah. Sounds like a good idea.
They bought the alcohol though, which was even better.
Well, there you go. And when evaluating projects for funding, what are the sort of key factors you're looking at?
I think when we start looking at a project, there are 3 things we look at initially. First is the deal. So do the financials of the deal stack? Is it profitable? Is a bank going to like it? Does it meet the funding metrics? So first we've got the deal. Secondly, you've got the developer. Is the developer suitable for the deal? Do they have the relevant experience? If they don't, not a problem. Good, we know that. What workarounds have we got? Can we get an experienced contractor in or a project manager? What mitigating factors can we put in there? And then the third is their financial position. So do they have the ability to offer the relevant personal guarantees, or are they a stable borrower? Are the bank going to like them? Once you've kind of covered off those 3 points, for the most part, there's always then other bits you need to look at. But if you've got a deal that stacks with a developer who's suitable for that deal, and we know they will meet the lender's requirements from a kind of funding perspective, you're halfway there. Then you're dealing with the nitty gritty.
And something that's always surprised me is there are actually a lot of lenders out there who will, I say a lot, there are some lenders out there who will look at fairly inexperienced developers if it's particularly compelling, if they've got maybe an investor that has experience, or they have a fantastic head contractor or whatever, like you say, and you can get quite a few different deals funded if you're clever about it.
We've got, I'd say, over 150 lenders, arguably maybe up to 200. So there's always lenders for a certain project. It comes back to that understanding what each project needs. But when we look at a deal, it's like old school balancing scales. I always go, there are things that every client has going in their favour, and there may be some things that don't. And what we need to do is understand the things that aren't, find the mitigating strategies, and then level that up so that a bank go, actually, well, we've got this, which is good, and although that's not great, they've mitigated it to a point that the bank gets comfortable.
Well, it's sort of like you said before, it's all about communication, and if you're transparent with people, and I actually think there's something to be said sometimes when I've dealt with investors, for example, in my own development companies, they ask you about past deals, and sometimes I say, well, actually, this deal wasn't a great deal, but these 2 are fantastic deals. And I think most investors think that that's a good thing that you're telling them that, rather than going, oh yeah, I make 25 25% return on everything I ever touch, they're not going to believe you.
I would always argue that you learn more from your mistakes than you do your successes.
Yeah.
And I would feel, if, as an investor, feel much more comfortable in investing in someone who said, I've made these mistakes, I'm honest about it, but I've learned for it, and it definitely isn't, happening again. No one's only ever done a successful deal. This is property, right? Not the whole world isn't just what's on Instagram.
Absolutely. And equity and debt can be quite a tricky puzzle. So how do you go about optimising the capital stack?
I may repeat myself a few times in this,
That's all right.
but it always does come.
Cut them out, don't worry.
No, but it always does come back to what the client needs. So different clients have different requirements. Some clients prefer to be lower geared and have access to more capital. So in those types of scenarios, it's about finding them the most cost-effective route of financing. Clients who have less cash and are trying to stretch further, then you really do get into optimising the stack, which is your senior, your mezz, then plus the equity. Then you start looking at, are you better having separate senior and mezz, or is it better to try and keep it all in? When you get into things like mezz particularly and equity, it gets complicated because certain mezz lenders will only work with certain senior lenders will only work with certain mezz lenders. So it is kind of, when you get into that stretch space, it is a bit of a puzzle, and it takes a little bit of time, but you just take it step by step.
Yeah, no, that makes sense. And at Willow Isle Capital, you offer bridging loans, refurbishment loans, development loans, mezz finance, equity funding. How do you choose which is the right one for each project?
Sometimes it's not just us who chooses. It often goes back to the client. So a good example, if you look at this, some deals just sit naturally in certain buckets. If you're buying a house at auction that you're just going to spend 20, 30 grand on refurbing, that's a bridge all day long. Yeah. If you get into kind of the conversion projects, often they start to straddle different areas. So there's specialist refurbishment finance, but it could also run under development finance. Yeah. And those two products are structured quite differently. They have different requirements. The lenders treat them differently, and each have their pros and cons. Neither one is necessarily better than the other, but for a certain client's position, the client may prefer it. So in those types of circumstances, we go out and we get terms on both options, present both back to the client, talk them through, both the financials, but also the subjective matters, and then see which they respond to the best.
I think another thing is that, like you say, often the right hat will fit on the right deal, or on the right head would be the better analogy. And I think the more deals you do with a particular lender, I've found as a developer, the more deals you do, the more that they perhaps will improve those terms slightly. So they might say, well, if you're spending 50k on that house, we'll do it on a bridge. But once you spend more than that, we want it to be a development loan, or whatever it might be, whatever their parameters are. But if you do 10 deals with them and they know that you're good for what you're doing, they will move a little bit, I find.
There can be a little bit of flex when you've worked with a lender.
A little bit.
Never going to be. There's never loads of flex.
Yeah, a little bit. And what are the sort of trends you're seeing at the moment in the world of finance?
I would say the start of this year, this first quarter, has probably been the most competitive start to a year I've seen between lenders. The amount of lender engagement we're getting, the demand they have for deals, the willingness of rates have come down, not massively, but they have come down somewhat. There's new product innovation. And I think what we're seeing is there is probably more money out there than deals. Yep. All of the lenders have, need to get their money out the door. So there's a willingness there to do business. Some things clients don't necessarily always appreciate is, as a broker, if we're doing 10, 15 deals a year with a lender, we do not have buying power, but sometimes they'll listen to us. And we have had a number of deals for the right clients and the right deals this year where we've gone in and secured significantly lower pricing than what the market pricing is, because they're keen to do more deals. We're not going to go market that to everyone. So there is an opportunity for us to negotiate bespoke deals. Like that one I did at Mippen was probably 1% cheaper than what would have been.
Because of your relationship with the lenders.
Lenders would rather do 15 deals a year with a broker. Again, there's always a limit to what we can do, but I've seen the openness of lenders to have conversations to win deals. I mean, a crazy example, and it doesn't always happen like this, is I sent a deal out on Wednesday last week, and one lender rang me. They know the area, they love the area, they've heard of the developer, The conversation I had was, what do I need to price this at to win it? You know, and in that instance, I'm going, well,
5%.
yeah, I try, but you know, that is a nice place to be, and I think given the fact that we've had 5 years of real turmoil, if not longer,
It's been tough.
Yeah, I wouldn't say we're in the best economic climate at the moment,
No.
but at least it's a little bit more stable than it has been.
Strong and stable.
Yeah.
And stretch debt solutions are becoming more and more popular. I mean, just for our listeners, viewers, explain a little bit what they are and how these benefit projects.
Yeah, I mean, it's interesting because stretch debt encompasses a whole host of things. A lot of people, you know, it was MES, right? But now a lot of senior development lenders are building that into one product. But it's interesting that it's also now started to move into the bridging space. So if you take residential bridging, that always used to cap out at 75% loan to value.
Yeah.
There are now lenders, when you're doing works to properties and funding those works yourself, going up to 85 or 90% of purchase price, which has been a game changer. And those lenders are really, you know, if I look at our pipeline now, taking a lot of our volume, because I mean the advantages of anything stretch, whether it be a bridge or a development loan, is the client needs less cash in the deal. What does that mean? Well, you know, they need to raise less equity, they can diversify across more projects, they can undertake more projects, you know, they can grow quicker. The stretch space is
Also more risk. We should
you
mention that.
literally took the words out of my mouth, in the fact that it is great, but you do have to be conscious of, you know, the level of gearing, how comfortable you are. You know, you have to consider how experienced you are. You have to make sure you understand.
Yeah.
And the thing is, particularly on the stretch bridging side, it is tested. So it's like they'll give you 90% or 85% of purchase price, as long as that is not greater than 75% of the end value.
Fine.
So the argument is that you should still be able to get a 75% mortgage to get yourself out at the end.
The old saying, you know, you make your money on the buy, it's very true. And the cheaper you buy something, generally the more options you've got with lenders, obviously, because if you buy something for next to nothing, then you're protecting against having to fire sell it one day, I guess. That's from their side.
Yeah.
So in terms of the future of development, over the next 5 years, what do you think the opportunities are for developers?
Each developer has different strategies for different reasons, and we see so many clients focusing on different types of deals in different areas. I think if you look at the general landscape, we've got Labour wanting to open up, planning, you know, anything that they're kind of starting to move on is going to be a big trend. We've already heard them talking about grey belt land, whether there's going to be anything that they do in terms of amending the PD rights. All of that is going to start to create opportunity. Another interesting opportunity is that 1.8 million homeowners this year need to remortgage. Most of those homeowners are still on extremely low mortgages, and there's you know, similarly a lot of buy-to-let landlords. A lot of those are going to be coming out onto quite expensive finance. You know, some happy will absorb it, you know, will stay where they are, and unfortunately it just becomes more expensive. Others will be saying, you know, this doesn't work for me, I want to move on. And particularly, I think the older landlords, I mean, I'm not an old landlord, but I've held some stock for a while. I'm looking at some of my stock and going, you know, does this really stack? Do we still want to be holding it? And, you know, just because it doesn't work for me doesn't mean it's not going to work for someone else and they couldn't do something
Vanilla
different with it.
buy-to-let, they call that now, don't they?
Yeah, I think there could be an opportunity growing out of that. And then I think, you know, there's the whole sustainable approach, energy efficient approaches that I think are going to become more and more and more important over the next 5 years.
Well, funny you should say that, because I was going to ask you about that. How do lenders support these sustainable projects? What are the options to save money, for example, on your borrowing?
At the moment, it's to a point, right? There are some lenders who offer some incentives. Some are better than others. There's one lender in particular whose incentives are better, but they're still not at the moment. You know,
what are we talking roughly?
Oh, so that lender is very good. They do
Just
offer,
a ballpark.
That's about 1.5%, 2% on the rate. So they are good. But with a lot of other lenders, it's, you know, 0.25 on an exit fee or 0.5% on an arrangement fee, which, you know, is it really going to move the needle?
Yeah.
Not a lot. Often, in order to achieve this, the clients are having to spend more to hit certain EPCs. And if you look at a lot of house refurbs, house conversions, Victorian stock, particularly office stock, it doesn't make as much sense to spend a absolute ton more money to save 0.25% on an arrangement fee.
Yeah.
But I do think this is an area that will grow and become more important for lenders over the next 5-10 years. And I do think we then will see the product range expand, and then there'll be more incentives to use it. Just at the moment, it is there. I just feel it is limited. Other than, like I say, that one particular lender who's
So hopefully
quite
more
good.
to come.
Hopefully.
Because really, unless developers are particularly into their sustainability, they're going to look simply at, well, this is costing me 10,000 to do, and I'm going to save 5,000, and they're probably not going to do it, which is a shame. So that balance needs to tip a little bit, doesn't it?
Yeah.
So obviously, aside from Willow Isle Capital, you're also an advisor at the Developers Club. And how do you go about supporting members of the club with their bridging and mortgage needs?
I mean,
Finance needs, I should say.
Well, I think it's really bizarre that we're here, right? So I was
in Mayfair.
No, in this room.
Oh, right.
In this room. So this is the room where the first ever Developers Club meeting was
I did
held.
know that. Yeah.
And I was there. I think all in all there were 6, maybe 7 people. And when I joined that room, in part I joined it because as a business owner, I wanted to have a network of other business owners. I thought, if I win one deal out of it, it's worth it. I did not imagine that, that room would become what the Developers Club has today. So I hope we've been, in a way supportive of the leadership team. We are very proud of what they've achieved. In terms of supporting the members, I mean, we do just everything we can. Any deal, they can pick up the phone anytime, WhatsApp, email, to the point where I think it's important to note as well that people do come into the Developers Club with their own advisors, whether it be a broker in my situation or a building consultant or a solicitor. There's no I don't work for the Developers Club, right? And there's no necessity that a member has to use us. But even if you've got your own advisor and you want a second opinion, I'm still going to pick up the phone and say, hey, look, this looks good. I'm happy to do that. You want everyone around you to be successful and happy.
And look, even if that person doesn't use you necessarily, they might have a friend or family member who says, a good broker, and they go, well, actually, Stefan's been helpful to me. I'm going to pass his details on.
Yeah,
that's how it works.
This is a long game. So there was back in the early days, there was a board member who came to me and he was like, look, I've got a problem on a loan. I was like, well, look, I know this lender. Let me go and have a chat. They were trying to negotiate an extension. I think overall I saved them about 25 grand on the extension and helped them restructure it. I didn't charge it. It wasn't my loan. It wasn't my place. I just restructured it for them, didn't ask for anything. 3 weeks later, he's got a new site and says, hey, look, can you look at this? For me, if you do the right things, then they end up being reciprocated later on is the hope.
So, Stefan, we talked earlier about how lenders will look at inexperienced developers as well as having 20, 30 developments under your belt. Have you got a couple of examples of young developers that you've helped and how you've actually helped them?
Yeah. I mean, there's a couple. So a guy I weirdly met on Facebook. He came to me, he'd managed to secure planning on a site for 9 new build flats in East London. To that point, all he'd done before was refurbish a house. So trying to go from refurbishing a house to building 9 new build flats in South East London with a GDV of 4.5 million is quite a stretch. Also had limited equity, obviously limited experience. He did the work of putting in place the right team around him, managed to find an equity investor to join him to help bring some cash to the deal. We then worked to find a lender who could get comfortable with that team. Now, there was slightly lower gearing, but it got him over that hurdle. He managed to build and sell all of those flats within 12 months.
Wow.
Then secured an option agreement on the garden next door for an almost identical scheme, rolled across, built the same thing again, sold it again. So you've gone from meeting someone who's only refurbished a house before to suddenly doing 9 million in GDV in 2 years with very little experience and very little money. We had another client approach us who'd got a site under offer in South London. Again, very little experience, very little money, but they had control of what was quite a profitable site. So interestingly, what they did was they went out to tender to 20 contractors, but the condition of
20?
because the condition of the contract was that the contractor had to put in equity and had to help personally guarantee the loans. They're effectively trying to find a contractor to JV with them on the scheme to help keep the bank happy. They did manage to find one.
They found one?
Yeah, and then did manage to...
I'm not sure my contractors would agree.
No, but don't forget, a lot of contractors have aspirations to be developers. They obviously have the experience and can build it. And contracting, they are making money. So there are funds there. It just depends what the firm is doing with them. So actually, I thought that was a really
very
clever...
creative.
It was a very, very creative way. So I'm not saying you can, always help someone take giant leaps, but, that phrase, where there's a will, there's a way. I mean, both of these two were very dogged individuals, who just weren't taking no for an answer. So the question to us was really, what do we need to do to get the financing? And I'm like, well, look, these are the hurdles you need to overcome. And they're then going, right, well, here's how I plan to get around to them. Would that be acceptable?
Yeah. Well, when I first started out as a developer, seems like a long time ago now, I was always told by more experienced developers, if your deal's a good deal, someone will finance it for you because it's compelling financially. But if it's not a cheap deal and you're overpaying, then it's going to be obviously a lot harder, which may sound obvious, but sometimes I think people need to, when they're getting knockbacks on finance, they also need to think, well, this might be an indication that it's not a great deal either. I think you've got to be a bit careful. It can work both ways. And presumably those younger developers will be paying slightly higher rates. What percentagely, how much more will they pay? 5% more, 10% more, or not?
No, not wildly. I mean, the development rates, as of now, are, somewhere between 9.5% and 13.5%, in that region. So you never kind of more than 4% swing. But if you have someone who is, slightly less experienced or it is more of a quirky deal, maybe you're paying 1.5% extra, but nothing. If that breaks the deal, it's not a good deal.
Well, one thing I've learned with taking development finance is that if you, for example, I try and avoid if I can, having a QS on the development projects I do from the lender's side, because you end up paying £1,000 plus VAT every time they come to site. If you can have an asset manager come, you pay 250, 300 quid. They'll normally come the next day. It's much quicker. They don't need to write a report for a week.
Yeah.
So that's just one example of how I, as a developer, have managed to save money. And if you're running 4 or 5 developments like I am at any one time, that's quite a considerable cost saving. It might be 10k per project on your bottom line, which is a lot. And then also with legal fees, I've learned to push legal fees down as much as I can. There's only so much you can do it. Are there any other ways that you think off the top of your head that if you were coming into to developing as a young developer, what would you look to do from a finance side other than those?
There's not a ton of flex with lenders, right?
Agreed.
But I would start by, you don't get unless you ask. So it kind of mentioned earlier that we have managed to negotiate some bespoke deals. We always push. So if we've got 2 lenders who are quite close, we'll say to them, look, we're going to go back to both lenders to see if they want to sharpen the pencil to see who wants the deal the most. So you can always try and push on pricing, particularly for certain deals and clients that we've worked with on multiple deals. We can be willing to, offer a little bit of flexibility on our fee. I don't think we've mentioned it, but we charge no broking fees as a company on bridging, refurbishment. No. So I don't agree, particularly on bridging, refurbishment and development deals. The brokers taking from the lenders as part of the arrangement fee, which is how we get paid, but then also charging the client a broker fee. That doesn't sit well with me. So if your broker's currently charging a broker fee, I'd be pushing back on that. The asset manager QS is a very interesting point and one that we actually do make clear to our clients. But the asset managers are mainly on refurbishments and conversions. You still need a QS on new builds.
Stuff.
There's an interesting argument around things like solicitors, valuers, and also lenders on the more you do with someone, arguably, do you have more buying power and can save a little bit of money? But also, are you too overexposed to someone? So we have some clients who like doing more deals with one lender and keeping all of the professionals the same. But then, how exposed are you to that lender? We have other clients who are like, I want one, if I'm doing 3 projects, I want them with 3 separate lenders just in case something happens. They don't want them all to be wrapped up in the same wrapper.
It always blows my mind that I have to pay £6,000 for a valuation on a 3-bedroom flat in zone 1 to one of the big estate agency firms that also does valuations. And I guess really the reason you've got a lender is only as good as the money behind it, right? And really you're satisfying the covenants between the big money behind a lender normally and the lender themselves.
Yeah.
And I think it's really a box ticking exercise to say that we as the lender have done our compliance to keep our pension fund behind us, or whoever it might be, offshore money, whatever it is, happy.
And as much as possible. So we do always often push back on valuation and legal quotes if we do think they're expensive. Typically, though, you would hope they are proportionate. Most of the time, the fee scales are done on a percentage of purchase price, or yours are a little bit more expensive because they are expensive properties in central London. If I was doing a 3-bedroom house in Nottingham, I'd expect it to be more, 800 quid a grand. You're not going to get charged £6,000 for a 200 grand
I appreciate
purchase.
That. Yeah.
But you'd hope they're reasonable. We do try and push back where we can. There's just a limit to how much we can push.
Sure. And a couple of other things. So personal guarantees, always talked about, and for anyone trying to get into development, people always say never give a personal guarantee in business, which I always think is a little bit short-sighted, because in property development that doesn't really work unless you're putting down normally 50% or more as a deposit. Most lenders won't. They would expect a PG of some sort. So have you got any advice on minimising PGs for?
So there are two things to understand on PGs. So on things like buy-to-let loans and bridging loans, they take personal guarantees, but they don't necessarily stress test the personal guarantee. So if you want to take a bridging loan of £500,000, they don't necessarily require you to have £500,000 in net assets, because their security is, they're only offering 75% of the value of the property, and they've checked everything else out in regards to the deal. It's on development loans that the PGs start to become more important, because those PGs are specifically there to cover cost and interest overruns. So what the lender is looking for there is, if you get yourself into a bit of a mess, do you have the resources to bail yourself out?
Yeah.
Which is a fair comment and assumption to make, because if someone's lending you 3 million quid to build 8 houses, and then suddenly you get an extra bill of 200 grand that you've not budgeted. You need that financial flex. And the development PGs are, often capped to 20 to 30% ish on average. The bridging PGs are usually more just like 100% of the loan amount. But you end up in an argument between clients and lenders, where the clients go, "Oh, I don't want to give a PG." Understand, as you said, but the lender goes, well, if the client is not willing to give the PG and they don't have faith in the deal, why should I lend them 3 million quid to do the deal? So I can see it from both sides, but unfortunately it is a necessary evil in the game we play.
Yeah, absolutely. I've got a few myself.
Yeah.
And I just try to minimise them where I can. I mean, they also take them as a percentage normally of the GDV as well, which I always think is interesting, because it's not the GDV really that they're, I guess they are lending against it in some ways, but what they're lending against on day one, you'd think they take it as that, but they don't. They take it as a percentage of the GDV.
Different lenders do it different ways. Yeah. Sometimes it can be GDV, sometimes it will be, more often I see it as a percentage of the loan amount.
Maybe I need to take that with my lenders. I'm using. So Stefan, talking about sort of strategy and growth and partnerships, they're obviously critical to all business really. What's your approach to building strong relationships with developers and investors?
For me, I find people just appreciate honesty. Sometimes maybe I can be a bit too blunt, but sometimes you just need to get to the point. But we give honest advice to the point where it's to our own detriment. Or if I was dealing with a client last week, they came to me and said, look, can you re-bridge this property for me? I said, I can. And in that case, our company would make money. But actually looking at their situation, they would be better off negotiating an extension with their current lender. They would avoid the hassle of new valuation, new legals. They won't have the hassle of having to put in place a whole new loan. And arguably, overall, it would work out cheaper. So, whilst the client comes to us saying, can you re-bridge, which would be beneficial to our company, the advice back is, yes, we could, but actually, this is probably the better answer for you. If you take other examples where, clients they bring us a site and they're saying, well, look, we need to buy this unconditionally. We do say, well, look, have you considered a lease option? Have you considered subject to planning permission? Because if you can avoid the cost of the bridge whilst you're on planning, or could you get equity investment to help you buy it in cash? That's going to save you a fortune. To our detriment, if they did the bridge, fantastic. We want our developers to be as successful as they can for as long as they can. I'm not after, trying to maximise every little bit I can make from every deal. I think people can appreciate that honesty, and it also helps build the trust.
Like you say, playing the long game. I'm a huge advocate of the long game.
Yeah.
Sometimes I'll do deals with people in other businesses that I have, which my colleagues will say, well, hang on, we hardly made any money from that. And I'll say, well, no, but I know that they're going to give us £100,000 deal in a couple of years, and we need to get them on board. And it's, long game is
Agreed.
What I would say. So that's very sensible. And obviously, we've had a lot of issues in the economy, whether it be Brexit, COVID, one thing after another, Trump coming in and tariffs. Every month there's something else in the property market. And how do you help your clients build in resilience to their financial strategies?
We strongly encourage them to stress test everything. Putting on a Developer Club member, Jack Jiggins, is fantastic at stress testing. I'm sure there's somewhere on the portals one of his presentations where he talks about the different stress tests that they do. If build costs go up, if GDV comes down, what is the impact on the development? I'd suggest that's an exercise that every client
Good
does.
Advice.
Yeah.
And presumably secondary exits as well. Being reliant on a sale only.
Yeah. Which if you can, fantastic. Some schemes, do only work on a single exit. But yeah, stress testing the exit. The other thing as well is bridge to refurb is quite a big one. So clients can get themselves into a trap where they overborrow on a bridge and don't understand the full effect of what the development day one loan is going to be. So we offer like a full equity estimation and modelling service. We don't charge for it. This isn't like a added on extra, but for every bridge that comes into us that is then going to go onto a development loan, we run the development appraisal for them on the terms to ensure that either there is no gap when they switch onto the dev loan, or if there is, they know about it and they don't suddenly get a panic phone call going, crap, I need 200 grand to try and clear my bridge, and I didn't think I'd have to. So I think part of the job as a broker is to try and spot as many, and we're not perfect, but try and spot as many of the hurdles that could trip them up along the way and prepare for it, and try and effectively, remove those hurdles altogether.
Absolutely. Sounds sensible. And what are the common mistakes that you see with developers trying to find funding? Is there anything in particular you've noticed?
I think we've covered a lot through the discussion, but I think one of them, and I've got a slide on it in one of our presentations, is that sometimes they can take the bank funding for granted. Okay, they put a lot of equity in, a lot of time into maybe finding the equity or finding the deal, and they just go, "I've loads of bank financing. That's going to be easy." And I came up with the example of a gin and tonic, whereby people have or can be quite particular in the gin that they drink, and then the bartender goes, "What tonic do you want?" And they just go, "Oh, the normal tonic," and they just chuck the tonic on. So if you think that the gin is the equity or the deal, and you're really particular about that, and then you just chuck on any tonic, you just chuck on any debt, 90% of your glass is that tonic, and actually the same effort should go into choosing the right debt lender for both the subjective and the financial factors as goes into the gin portion.
That makes sense. You've got to be fancying a nice drink now, but it's a bit early, I think.
Yeah, we'll record this in the evening next time.
I know, and we're right next to a bar as well. Filming this. So at the Developers Club, we talk a lot about the power of community, and how important do you think networks are for developers? And
Huge. I honestly think it's everything. And as a developer, when I was a developer, as a broker, I've been to so many different events and networking events and groups, and I really think that having a group is important, having that network. If you think about it, running a business is hard. A lot of people here are business owners, they don't have big teams, they don't have too many people they can call upon, so having that support is important. Also, if you look at the fact that, every member has different strengths and weaknesses. If you need an answer to a question, you can put it on a WhatsApp group. If someone in the group doesn't know the answer, someone's friend will know the answer. You've got the information at your fingertips. So between the emotional support and also the kind of detailed support, I think it's huge. It's part of the reason why I said I joined it initially, was that I wanted some people who understood my position, because there's only so much your wife or your partner or your mum wants to hear about you moaning about stuff. And you know, sometimes you just need that chance to vent and talk it through with people who understand what it's like to run a business.
Interest rates and personal guarantees, not the best pillow talk, is it, with your partner? I think there's probably better things to talk about at home. Absolutely. So in terms of developers going out and leveraging those networks and mentors, any advice on how to leverage those relationships?
Tell absolutely everyone what you do.
And annoy everyone.
Yeah, I mean, not to the point of annoying them, but you just don't know who someone is, who they know, what they do. You know, you'd be amazed how many people have 50 to 100 grand squirreled away in a 2% interest account that could invest. How many people's uncle might own a farm that actually the barns, he's got planning permission to build some houses and might be looking to offload it. You know, if you're not out there telling people what you're doing, those opportunities aren't going to come and find you. So that would be my biggest bit of advice.
Great advice. And for developers looking to partner with your business, Willow Isle Capital, what can they do to stand out and really position themselves as strongly as possible?
At Willow, we operate in, you know, the small loan space up to the really large loan space. So, you know, obviously the more professional someone can be, the more experienced someone can be, the more they've delved into their models and their assumptions. All of that's fantastic. But you don't have to come to us as the finished article. We're kind of your safe space where we can kind of get all of the warts out. We can understand everything. We go, look, this needs to be presented much better. We need this. We've got a template for that. And then we get you ready to go to the funders. You know, if you talk about what's the advice of people going to funders, obviously there's a load of things that we want our clients to be doing. But actually we're the kind of safe space in the middle where we can get all of that out. We can be very honest and open, and we can help you work on stuff before you then go to the funders. Because we work with a lot of people who are new or taking big steps up, and therefore what's required changes.
Interesting. It's a little bit like with a recruitment agent who brings in, a candidate, and then they get them to sort of ready, improve a few things on the CV, and then send them off to the employer, prospective employer. You're really doing the same thing, albeit with developers and lenders, which is an interesting analogy.
Part of sometimes in the broking space, so like getting terms is, anyone can go and put some numbers into a calculator. The stuff we do before you go to the lender, the support we offer through valuation and legals and MS is crucial. Also, we act as that buffer between the client and the lender. Sometimes, if we let our clients go at the lenders in a way that they'd want to, I'm not sure
they get anything.
but come to us and have the moan, and then we can calm everything down, repurpose the conversation, go to the lender with maybe a more subdued but still asking the same kind of questions. There's a lot that we offer by sitting in the middle, but particularly at the start, we can be that safe space to get everything ready before it goes out and help you prevent making any.
And then I guess your interests are aligned, and you'll get a fee, they'll get a loan, the lender will make money. The best deals I always think the best deals in business are ones where everybody wins. Yeah. People think that for everyone to win, someone's got to really lose, but it's not always the case. Often in a good business transaction, you can have three parties involved that all do well. They get the funding and make a load of money from the deal. You're making money, and the lender's making money. It's perfect. When it goes right. That's the ideal. And a little bit sort of about you personally in terms of your business, and what are you doing to keep pushing the boundaries in property finance?
Well, I want to win one of these awards.
You've got to win all three.
I don't necessarily want Willow to be the biggest brokerage. I like the fact we know our clients, we have personal relationships with them. I'm really keen on constantly improving the customer journey, ensuring our clients are as happy as they can be. Now, like we said, nothing in this world is ever perfect. There are always hurdles. It's how you respond to them. But improving that customer journey is what I'm kind of really about. And, I gave a presentation this morning on, hot case progression and how to improve.
You've been everywhere today, haven't you?
Yeah. So we're just constantly trying to evolve and improve, really.
Makes total sense. And is there a particular piece of advice you've been given throughout your career that you think you could pass on that would help people?
How high would you fly if you knew you couldn't fail? Because I think often we are the ones who hold ourselves.
How high would you fly if you knew you couldn't fail?
Yeah.
Sounds like a piece of art that you see sometimes.
Probably Instagram.
Yeah.
And do you know what? The other one is similar to what we were both saying about playing the long game. So it's that most people overestimate what they can do in a year and underestimate what they can achieve in a lifetime.
Yeah.
And I think particularly if I go back to 25, 28, even 30-year-old Stefan, being honest, I was like, I want to retire at 35, I'm going to retire at this. You kind of have all of those like outlandish goals that quite frankly aren't achievable. And then your mindset starts to shift. And I very much do have a long-term mindset, both on the business and personally. And I do think playing that long game is quite important, and not putting too much pressure on yourself to do, you don't have to take over the world in 1 year. You don't have to do 10 schemes in 1 year. Yeah, I think sometimes people do try and do or expect too much of themselves in a year, and actually they took a longer view time frame, they'd still be happy.
Absolutely. And where can listeners go to learn more about Willow Isle Capital?
Or you can always email me, canavan@willowisle.com. We've got Instagram, so the team are fantastic. I'm pretty useless with social media, but they are much better. And there's now actually a lot of information up there for people to review. And we put up stories and the website, willowisle.com. But we're very personable. Just send us an email, pick up the phone, we'll have a chat. We always speak to everyone, like I said, within 24 hours. So we're hopefully quite approachable.
Stefan, thank you very much. It's been great having you on the Developers Club podcast. You can get all of our social media handles at developersclub.uk. You can also search Developers Club on Spotify, Apple and YouTube. My name is Ben Wilson from Knight James, and I've been your host, and thank you for tuning in to the Developers Club podcast.